It's Wednesday, the 2nd of June 2021. Welcome to the Fear and Greed Business Headlines, the business news you need in just 5 minutes. I'm Sean Aylmer. In today's headlines, house prices surge as the Reserve Bank indicates it has no plans to lift interest rates anytime soon. Plus, authorities look to be gaining control of the COVID outbreak in Victoria, with just 3 new cases yesterday. Get ready for a cut in real wages as superannuation rules change. And good news for the media companies with advertising levels surging. Our lead story today, house prices in Australia surged last month with all capital cities except Perth and Darwin achieving record highs. The figures from CoreLogic came as the Reserve Bank Board, following its meeting yesterday, committed to keeping interest rates low over the next 3 years. But there was a hint in the central bank's communique that while the official cash rate was on hold, further bond purchases that keep a lid on short to medium term rates could be wound back. Property prices across capital cities rose 2.3% last month, their second fastest monthly pace since the late 1980s. House prices are up 9.4% on 1 year ago and have been rising for 8 straight months. House prices outperformed unit prices, and in Sydney, homes are up 14% in just 4 months. The housing data was released as the RBA board met. The central bank again noted the continuing global recovery and that Australia's pickup had been faster than expected. The board said there were labour shortages in some parts of the economy, incredible given 9 months ago we were in a severe recession. It also noted that investors were now playing a greater role in the property market. The bank reiterated that the cash rate will remain at its current level until actual inflation is in the 2 to 3% target range and there's much stronger wages growth. What's all this mean? Well, things are going well, but the Reserve Bank isn't quite as confident about the economic outlook as homeowners, who are prepared to spend up big to get into or invest in the property market. In overseas news, inflation in the Eurozone rose to 2% last month, the first time it's been above the European Central Bank's target in 2 years. That will put pressure on the ECB to tighten monetary policy when it meets next week. The United Kingdom achieved a significant milestone overnight, 24 hours without a recorded death from coronavirus for the first time since the outset of the pandemic. Meanwhile, in Germany, the government downgraded the country's COVID risk from very high to high, as health officials said there was reason for optimism. The total number of coronavirus cases recorded since the beginning of the pandemic is now almost 171 million, with 3.6 million deaths. And China's President Xi Jinping has urged Chinese officials to create a trustworthy, lovable and respectable image for the country, according to Bloomberg, in a move that some China watchers said was indicative of Beijing trying to smooth its hard-edged diplomatic approach. Mr. Xi called for the country to make friends extensively. I wonder whether Australia will fit into that camp. Locally, there were just 3 new community-transmitted cases of COVID-19 announced in Victoria yesterday, following Monday's tally of 11. While any new case is bad news, the relatively low number yesterday was positive, as was the fact that all were linked to known sources. None of the cases were in aged care facilities. Meanwhile, Health Department boss Brendan Murphy said the National Cabinet on Friday will consider advice on making vaccination mandatory for aged care workers. It still isn't clear whether the Victorian lockdown will end as scheduled tomorrow. While authorities are gaining in confidence about getting control of the breakout, anything could happen. Each day in lockdown is costing Victoria $100 million, according to the Federal Treasury. That's a lot of money, but not as much as a daily cost last year because businesses have adapted their models. Nine Entertainment said it had signed deals with Google and Facebook, estimated to be worth around $30 million to the company's publishing division. Nine will supply news video clips and access to articles on Facebook's news products for 3 years. The deal with Google includes the supply of content, but not video. Nine's share price closed up 0.7% yesterday and is now nearly double the level of 12 months ago. From the beginning of next month, all employees will be required to pay 10% of their wages into superannuation, up from 9.5%. While some employers will foot the bill for the rise, many will not, and take-home pay of employees will fall. Treasury Secretary Stephen Kennedy yesterday said the federal budget assumed about 80% of increases would come at the expense of real wages. Lower real wages growth will detract from economic growth. And the advertising market in Australia was up 40% in April, compared to a year earlier, and good news for the media groups. Early indications are that May's spending was even better. Outdoor advertising led the way in terms of growth, which wasn't surprising given that sector suffered significantly during lockdowns. Digital advertising was next best, followed by television. However, the local pickup in advertising spend is still below the outcomes in other countries, including Canada, New Zealand, and the United States. That's the Fear and Greed business headlines for today. Make sure you hit follow so you get it every morning. And if you'd like more detail or more stories, search for our longer daily podcast called Fear and Greed. We also release a daily interview. Today, we're talking to the founder of tech startup Archistar, one to watch in the property sector. I'll be back later with the afternoon market report. I'm Sean Aylmer. Have a great day.